Asia's economies are reopening with impressive dynamism. That is according to the Asian Development Bank's assessment published earlier on Tuesday. Private consumption, investment and services, including tourism, are reviving now that the pandemic has largely passed. China's reopening after last year's lockdowns is brightening the outlook for both the region and the global economy. Regional growth is expected at 4.8% this year and next, with South Asia expected to grow faster than other regions. Growth in East Asia and Southeast Asia is benefiting from increased domestic demand and growth in the Pacific from returning tourists. Inflation is gradually coming down to pre-pandemic levels, the ADB forecasting the rate for developing Asia at 3.3% in 2024. Now, earlier, I spoke to Albert Park, the Asian Development Bank's chief economist, and I asked him why the region is economically outgrowing other parts of the world.
Well, I think Asia is putting the pandemic behind it and returning to normal rates of growth, which are even higher than what we're projecting, which is 4.8% growth both this year and next year. A lot of that is driven by the recovery in China as China has moved away from its zero COVID policy. Our projection is that China will grow at 5% this year and 4.5% next year. In addition, India, which is the second largest economy in the region, we expect to grow robustly at 6.4% this year and 6.7% next year on the back of very healthy consumption demand and rising investment.
Let's talk about China here for a second. You said it. China is out of the pandemic, has abandoned its zero COVID policy. Is everything back to normal in China?
Well, if you look at indicators of mobility within the country, like subway ridership, you see it really really back to normal, just as high as it was before the pandemic. At the same time, there are certain aspects that are sluggish to recovery. So unemployment rates are still a little bit higher on the high side, and incomes have not fully recovered to their pre-pandemic levels. Nonetheless, we're definitely seeing a big increase in demand in some sectors, especially services sector, contact-related services like hospitality, transport, hotels, etc.
Now, compared to other countries in the world, inflation in developing Asian economies seems to be rather low. Why is that?
Well, there's a few reasons. One is China itself, because China's inflation, we're projecting just about 2%, and it's been low throughout the pandemic period. It's been very well anchored, the expectations there. And China, because it's a large economy, has not been as subject to a kind of vulnerability from the need to import high-priced oil and food. A second reason that Asia's inflation has been lower than other parts of the world is that food prices have been a big part of the inflation challenge in many areas. In Asia, rice is the staple, and rice prices really have not risen like wheat and corn, let's say.
Right.
A third reason is that a number of the governments in the region have try to protect consumers by subsidizing prices of energy and food. And the last reason is that most of the countries in the regions did not have big stimulus packages like in the US and in Europe, which really fueled inflation kind of from the demand side. That's been a much more gradual recovery process in Asia.
Now, along with China, you mentioned India as one of the main drivers of growth in the region. Where is the demand for products made in India and for services in India coming from?
Well, India's growing robustly this year. It's not really from exports because of the slow growth in the U.S. and in Europe. Both regions we are projecting to grow less than 1% this year. Exports are not really driving the growth in India. It's more coming from domestic demand, recovery from the pandemic, also renewed activity, demand for services, investment coming in, some of the efforts of the government to support development of the manufacturing sector with incentive programs, with infrastructure investment, et cetera. Those are the more important drivers of higher growth in India.
Now, major oil-producing countries announced a cut in output to take effect in May, sending crude prices higher at the start of the week. How much of a risk does that pose to economies in the Asia-Pacific region?
Yeah, that's very worrisome, I think, because we know that the big spikes in commodity prices, energy and food, caused by the Russian invasion of Ukraine last year has been a real challenge for economies in the region. So if OPEC is cutting and if China is recovering and increasing its demand, there's some concern that prices for oil will go above what we've been projecting initially, which is $88 a barrel this year and $90 a barrel next year. Higher oil prices obviously creates inflationary pressure in the region. And it increased costs of production, and also it hurts consumers who rely on energy for a larger share of their consumption.
Albert Park, the Asian Development Bank's chief economist. Albert, thank you.
Thank you very much.